People go, I'm going to short
Oh
Tesla.
my
I go,
God.
why don't you short the banks? Like, I mean, you may take a 20% risk, but they're going to
That's so
zero.
stupid. Have lost so much money. How many times do you have to get your face ripped off to realize you're just an idiot? Go short a bank.
And all of those things were seeded on top of massive consumer demand. And I think this company is very similar to that ilk.
I had a tweet I put out there, ha ha ha, Tesla Q. I love it. I
Yeah.
mean, those dummies have lost so much money. How many times do you have to get your face ripped off to realize you're just an idiot?
Because the consumer demand is there. And frankly, it's just unmitigated. You cannot stop it. That is a runaway freight train. And every time
I get laughed at a lot. I don't think that the traditional investment community likes some of the ways in which I think about things. They laughed me off the stage when I was on Irisone, Lincoln Center in front of 5,000 people, and I picked Amazon in 15. I was literally laughed off the stage, and the 3 or 4 people after me were making fun of me. Guys that I know, David Einhorn made fun of me. It was just like, I was like, okay. And then when I did Tesla in 16, it was the same situation. And, look, I simplify what is a very complicated underwriting process to basically give you a one-pager or, really simple slides with a few words. But the reason is because I think, like, if you can't explain it to your son or you can't explain it to your mom, then you're making it too complicated. And if you can't write an investment thesis on one page, you shouldn't be buying something. You don't understand it, in my opinion. And I think it really tweaks sort of the establishment when I do those things. When I pitched Open Door in 4 minutes or Clover in 5 minutes, you can see steam coming out of the ears of folks because they don't like it. Whereas, an average everyday person can actually understand a business in 4 or 5 minutes if you actually present it that way. So, I think CNBC, it's kind of a necessary evil at some level.
Yeah.
And so, what I'm trying to do is proselytize. And, ideally, I think that the real escape velocity for me would be to figure out a way to be more part of a StockTwits community or, Wall Street Bets or whatever it is, where I can have a YouTube presence or Discord or whatever. I haven't figured any of this out yet, but I think like being more connected to retail where we can have a community and I can be a part of that. And I think that would be the best outcome. For example, if you look in Tesla, Howard, I don't know if you spend time in the Tesla community and Twitter, they're the smartest people.
Yeah.
And, you look at the battery guys, the physicists, the material science people, they work in a community. You get to ground truth on Tesla. I got to ground truth on Tesla in 2016 from those folks.
Mm-hmm. Me too. And I think with Tesla, if my big mistake on Tesla is not buying the car. My big win in Apple over the years was just owning the iPod and going into the store early. And just by being in the store, I won, because I knew something that nobody do. By going to the health club and seeing the earbuds, I won. I think the lesson of Tesla to me was, why didn't I buy a car? My partner, Gary, who's ridden the stock for forever, just owned from the first Spider car to this car, is just owned the car. And that was my mistake. So
by the way, I mean, let's just state the obvious, as you mentioned some of these names.
People go, I'm going to short Tesla. I go, why don't you short the banks? Like, I mean, you may take a 20% risk, but they're going to zero.
Stupid. I had a tweet I put out there, ha ha ha, Tesla Q. I love it. I mean, those dummies have lost so much money. How many times do you have to get your face ripped off to realize you're just an idiot? Go short a bank.
Yeah, it's an obvious trade, and they're the ones that are actually the most being buoyed so far because they're being helped the most. They're the crippled, crippled children. The thing about Tesla is the other thing people don't understand about this imbalance is global. So we wake up in the morning, no one understands that with Drive Wealth and Alpaca and Apex, that there's 1,000 Robin Hoods being born, I tell people. So when we wake up at night and Tesla is down, that may be a discount to someone in Nigeria or Eastern Asia or China who's using their app to buy fractional ownership of Tesla. And the next morning you wake up, it's limit up, and you go, what happened? I'm going, well, the rest of the world bought the dip.
And there's another thing there, which is that there is an insatiable demand, whether we want to acknowledge or not, in U.S. dollars and U.S. dollar denominated assets. I mean, let's go back to that example. If you're sitting in, Togo or Ghana, where the T-bill rate is 15%, what that's really telling you is your currency is worthless.
Yeah.
It's Zippo. And so, of course, you'd rather own a share of Tesla in hard U.S. dollars.
Yeah, even if it drops 60%, it's the brand. You'll average down.
Let's talk about the shorts for a second. Anybody that thinks that they can model the future in Excel is lying to themselves and their investors.
No, you mean with Tesla in particular, but you could probably say that.
No, I think it's true with every company. And so if some analyst somewhere decides that cell D37 in Excel means that you can be short this company, they're
you don't
lying
believe
to
financial modeling has any real, there's no real basis in it?
I think financial modeling is extremely valuable after you've built a logical model.
Because the consumer demand is there, and frankly, it's just unmitigated. You cannot stop it. That is a runaway freight train. And every time we use a financial model to try to get in front of consumer demand, you lose, right? Misunderstood Amazon, misunderstood Google, misunderstood Apple, misunderstood Facebook. And all of those things were seeded on top of massive consumer demand. And I think this company is very similar to that ilk.
I think financial modeling is extremely valuable after you've built a logical model. And in the case of innovation, innovation needs to be built on the heels of an understanding of product and technology. And that's very hard to do unless you've done it before. That's why when we start looking at businesses, we start from that perspective and then use the model to reinforce a perspective, but not to come to a perspective.
So does it bother you that I think at this point I would never want to drive an electric car? Because you've made the analogy to Apple, and I think the iPhone is a wonderful product, which I couldn't wait to have and can't imagine not having at this point. I'm not sure that I personally feel the same way about Tesla. My only point is that, is their addressable market much smaller than Apple's?
I think that their market is probably as big and if not bigger. And the reason I say that is that they've shown an unbelieving ability to go down market, to create lower and lower price point products that can get mass user adoption. And specifically to you, what I would tell you is I'm happy to ship my car to you and have you drive it for a month. And honestly, what I think you'll realize is
I don't want to find those charging stations that have to figure it out and wait in line. And then
it's incredible. Neither do I, but that's why the software does it for you. And then it'll drive you there automatically and plug the car in.
All right, Bill has a question. We'll let you in, Bill.
I do. Chamath, Warren Buffett lately has been singing the praises of Jeff Bezos. He feels like he missed the boat on Amazon, but he loves what Bezos has been able to accomplish with Amazon, in retail and in cloud space. Do you equate that with Elon Musk and Tesla or whatever company he is running? In other words, if you're going to invest in his companies, are you betting the jockey in this case, or are you betting on the business model that he has created for the company that we call Tesla right now?
It's such a fantastic point and question. At the end of the day, when you are making deep methodical investments in technology companies, it is fundamentally first and foremost about the jockey. And that was the point I was trying to make earlier today, which is that every time Wall Street has tried to bet against the jockey, for example, with Jeff Bezos, they've been fundamentally wrong and the shorts got their faces ripped off. It was also true with Facebook. It was true for a period with Apple. It was true for a period with Google. And I think it'll probably be the case with Tesla.